What are some of the key insights that you've shared so far? What's really struck you from the discussions you've been having with your peers across the industry? What are the barriers and how can they be overcome?
That very much breaks down into the perceived risk versus reward. And I deliberately use the word perceived there because a lot of this is actually quite new investments. It's a shift in behaviors, and learning something new means that actually you need to have an investment case, a reason and a justification for understanding that additional complexity. When you start to do something that's new, it's very often to say, well, we have more uncertainty, so we need to go along and have additional margins to make sure to allow for that variability that might come through because we don't have the data, the experience, and it's a new area for us. There's also the risks. A lot of it is investing in emerging and developing economies, which are generally seen as presenting with higher risk than investing in developed economies that we're already operating in. Around concepts like FX and exchange rates, that's also an additionality that comes through. And then also looking at how do you actually engage in reducing some of those, doing risk sharing? What are the other partners that we need to work with? And I suppose one of the main learnings is that the financial sector is incredibly complex. There are so many different partners across the full maturity of an investment life cycle. And all of these different parties need to be engaged and understand how some of these investment solutions can be developed to be able to be attractive and actually delivering the really important impact that they're aiming to do.